Hello, welcome to another talk on money, business, and investing. My name is Jose. I'm the founder of the company and brand here at Master Investor. If you're new to our community, ensure to subscribe and follow us on all of the social media platforms. Turn on the notifications so that you know when we go live or upload a valuable video that will change our finances forever, as long as we apply the information in our lives, right? That's how we turn the data into knowledge. And we can also learn from other people's mistakes. We don't have to learn by making the same mistakes that other people have made along the way. Those people that we call our mentors. We need to pick them wisely, because if we're listening to the wrong data, we're not gonna have the results that we're ultimately looking for, okay? So here inside our community, our mission is to elevate the financial well-being of humanity through high-quality financial education. Made simple, we look at opportunities to build passive income and true wealth. If you're an existing partner of Master Investor, welcome back. We appreciate your time being with us today, supporting our community, and of course, investing in one's financial education. That can never go wrong, because no one can take that away from us, and we can always capitalize on new trends. Today, we're living in a world with an abundance of new trends. And today we have a great topic, which is on paper assets, and the title is going to be the distinction between technical and fundamental analysis. Transitioning from fake assets like 401k, mutual funds, ETFs, IRAs, savings, etc. to sophisticated paper assets strategies. Remember, it takes financial education to elevate our financial intelligence, and that is what we need in order to solve financial problems. A lot of people end up giving their money away to other people. Why? Because they lack financial education, so they have fear. They don't know how to manage risk. We did an article on that a few days ago, so if you haven't watched it, go to our last or previous live stream, and you'll be able to see every single topic that we have covered thus far, which ultimately is helping us build the asset column. Everything that we do here is to give us the ultra wealthy context, the mindset of the ultra wealthy, the framework in which we need to operate in order to build true wealth physically, right? Because today money is a currency, it's not longer real money. So we need to understand that right from the beginning. A lot of people still playing with the old rules of money. Right now we have 3 ebooks, the 10 new rules of money, how to build cash flow with the internet, turn passive income on, and the 10 and how to invest in crypto to build wealth, understanding Bitcoin and blockchain. You can find all of them on Amazon as well, or you can go straight to our website, which is better because we have additional bonuses and assets that we have added into each ebook, because they have turned into digital courses that are vivid. We are adding more assets as we go along, exclusive interviews with wealthy entrepreneurs, even new entrepreneurs, celebrities, and anybody that can help us understand farther on the topic of each book. Okay, so when you get in today, you'll be grandfathered in for any other asset that we added in there in the future at no additional cost. So it's just a great investment to make. It's a win-win. It's gonna go up in value. You're gonna have the ebook. You're gonna have additional assets that will help us, of course, build our asset column, such as in the ebook, How to Build Cash Flow with the Internet, Turn Passive Income On, you'll find one of the digital assets in there is a financial statement that is blank, and we need to fill it in. We download it straight to Excel, and then we can just go ahead and update it every day when we go look at it, or every week. We should be looking at our financial statement daily so that we can improve the assets column and we can manage our cash flow much better, okay? The more attention we give to our financial statement, the wealthier we're going to become. And remember that every business or investment has a financial statement. And today we're going to talk a little bit about the 8 essential and most important words when it comes to investing, okay? We're going to cover that by the end of this video. If you have any questions, please let us know. Reach out to us and look at on our website, because we have other services and resources, tools that can help you start your digital business, or there are 5 different asset classes that we can invest in, so you have to choose the one that you want to go into first. If you're starting now and you're someone that has only like fake assets such as 401ks and those things that appear to be assets but they're not, because they're not putting any money into our pocket. So if it's not doing that, then it's not an asset. Remember, and it's not about in 20 years and 30 years from now. No, that doesn't matter. Okay, an asset is a business or investment that puts money in our pocket right now, whenever we're not working, because it's a system of systems. Okay, a lot of people have liabilities that they call assets, and unfortunately, they are wrong labeling them assets. They have the wrong definition of what is an asset, and they may look rich on paper, right? That's why they call paper assets. But if they can't touch the money or they can't withdraw the money without being penalized, and it's not really an asset, they don't even control that asset, okay? And the economy goes up and down. We understand that as an inside investor here, a master investor, we understand that the economy goes up and down. So we prepare for any type of economy. We don't predict the market because we know it goes up and down. So the best approach is to invest in our financial education and diversify among the 5 different asset classes that exist. That's why we did an article and a live stream and also a podcast on that, on the 5 asset classes and why we should diversify among them, not just on one asset class. Majority of people that talk about diversification, they're talking about doing it through mutual funds, 401ks, ETFs. Those are paper assets, okay? And if the economy crashes, the investor loses everything. That's why that's too risky and it's too naive to do that as an investor. And majority of people that do that are those people that are high-paying employees and the middle class, and they lack financial education. They're too busy working, and so they lack the real education, which is how to make money. A lot of people say, well, it takes money to make money. Well, no, it doesn't really. Because if that was true, then everybody that has money in their bank account will make money with their money, and they don't. They give their money away to other people to invest it for them because they don't know how to do it. So in order for money to make money, we need financial education, and we can also create money from thin air, because the job number 1 of a wealthy entrepreneur is to raise capital. And the number 1 job of an inside investor or master investor is to make money work hard through sound investing. The number 1 skill of a wealthy entrepreneur is to learn how to, or master how to sell without selling, using systems and smart marketing. A business is a system of systems, doing the selling and selling for us. And a lot of people can go from being a self-employed to a real business owner by applying simple systems in their infrastructure. So if you want to learn how to go from fake assets to sophisticated assets by following certain advanced strategies that we're going to be explaining today on this amazing talk, then stay by the end of this video. And if you're listening to a podcast, make sure you go all the way to the end, because we have a bonus by the end. We're going to give the 8 different words that are essential when it comes to investing, right? We want to have them in our memory file at all times, because we're building wealth like a pro. We're building wealth like the ultra wealthy do. They don't give control away. We're incorporating our companies, and those companies that we control they own the assets that we are acquiring. Whether it's an affiliate product that we're marketing for somebody else, that income that is coming in from those sales, we're not going to pay that to ourselves personally. We're going to pay that to the business, to our company that we control, that we own. That way it's passive income, and we can minimize taxes. But if we pay ourselves, that would be other type of income, would be earned income, and then we have to pay taxes on that. So we don't recommend anyone to do that. So that's why it's important to get all of our ebooks, because it's going to give you the tools, and we need to treat our small business like a big business if we truly want to become wealthy. And anybody that has a big business must treat their business like a small business as well. That way they don't mess anything. We need to nurture the business all the time, and we need to do it right from the beginning. A lot of gurus out there talk about, no, wait until you get money and then you incorporate. No, you're doing it backwards. You don't want to do that, because if something happens between that time where you earn that money to the time that you incorporate, then you're not protected. A company protects us from liability. And I don't recommend anyone putting their company on their, label it or naming it their name. You want to detach yourself unless you want to turn your name into a brand. We do want to create brands, but unless, like I said, you want to turn your name into a brand, then do it. There are a lot of people that do it, but it's harder. You want to probably create something that is universal, like Apple, like Nike, right? Adidas. These are not last names or anything like that, but there are great companies with last names. Trump, right, is one of them. Prada, I think, right? Christian Dior. All of these fashion designers, right? They have their name on their brands. So unless you want to have that, but you need to make your choice wisely. And I always recommend to detach ourselves from our companies, because What we want to do is have companies, businesses that create passive income because they're solving a problem in the market. So they're creating sales daily and we're getting a profit every single day after all expenses are paid. And that's our bottom line. That is called positive cash flow. And then we are investing that into other assets, those businesses that we're controlling with our companies, and that income that is coming in through passive income. And sometimes capital gains income, depending on the asset that we're going to acquire or build. Then we're going to utilize that money to buy more assets. And that's how we tap into the velocity of cash flow. At the end, we're not even using our money anymore to buy our assets. We're using the assets that we are controlling money to buy assets. So everything is for free at the end for us. When we do it correctly and with the ultra wealthy mindset, we can achieve and acquire anything for free. We can position ourselves to recoup our entire capital that we invest initially back and still collect passive income and control the asset forever. The idea is to collect assets that we don't have to sell because they do well in any type of economy. And if they don't do well, we have other assets and other asset classes that do well in any type of economy. That's why it's important to diversify among the 5 different asset classes that exist. They are: number 1, business; number 2, real estate; number 3, crypto; number 4, paper assets; number 5, commodities. Here at Master Investor, we have products and services in all of the asset classes because we truly believe that in order to build true wealth, we need to diversify among those 5 asset classes. So we have financial education in each asset class. So check out our products on our website and stay tuned because we're releasing our 4th ebook and our digital course. It's called How to Raise Capital to Build Wealth. Because the job number 1 of an entrepreneur is to raise capital, like I mentioned not too long ago. The Master Investors team assists people around the world from different walks of life who wish to enter the investment world with the ultra wealthy mindset. These are typically people who have come to the realization that instead of depending on their jobs or other people to take care of their finances, it is time for them to take charge of it. However, not everyone is prepared to give up their careers or drastically change their lifestyle in order to start investing full-time. The good news is that investing can never be a horrible idea, and there's never a wrong amount of money to start with, regardless of where we are in our personal, professional, or financial life. Since paper assets have the lower entry barrier, can be invested in during free time, and are most familiar to the ordinary investor. Stocks, bonds, and mutual funds are the most popular choice for those wishing to start investing for the first time, which those are fake assets. Remember, if they're not putting money into our pocket right now, then it's not an asset. We cannot call something an asset just because it's going up in value. Okay, it's an asset unless it's going to put money into our pocket right now. We can actually liquidate that. We can say, okay, we're going to sell that right now and touch that money right now in our account. Then it's an asset. But if it's just looking that it's going up on value via paper and that's all we're seeing for the next 30 years, then that is not an asset for 30 years. It's a liability that may turn into an asset one day. That's what that is. And we need to be very clear when it comes to building wealth, because if you have the wrong data and you go with the wrong mindset, you might sell yourself the wrong picture of how to build wealth. And by the time you wake up to it, it's too late. And I don't believe it's too late to ever start investing at all. But, sometime we have to check out of this life. We can't get out alive. So we need to make sure that we optimize our days and invest our time wisely in everything that we're doing. That's why we need to ask ourselves every day, are we doing what we love to do? Are we doing our passions? Are we doing our purpose in life? What is our purpose? Why are we doing what we're doing? A lot of people are just going by default in life, and they're literally missing out. And they're taking to the grave their dreams, their ideas, their purpose, mission, right, and talents and everything and that they really had in them, because they thought that working for money at a job was the thing to do in this life. That a lot of people are sold with the wrong idea about life. Go get a high-paying job and retire when you're 65, and then that's not the life that we were born to live. I mean, some people can do that and they're happy with it, and by all means, if you're that type of person. But I don't think if you're listening to this, you're that type of individual. You want more out of life, okay? Because we attract like-minded people. So here inside our community, we never talk about shrinking, about thinking small. We don't talk about cutting expenses. In fact, the total opposite, expand. Expenses, expand assets, expands liabilities, because liabilities are things that we want to have, right? Some liabilities, they do need to be cut off completely, but some liabilities are things that we enjoy. Luxury items, vacations, gifts, cars, private jets, anything that is material that we want to have because we like the experience of having that, then that will be a liability because it's just taking money out of our pocket, which is fine. As long as we have assets that will pay for that liability's cost, we don't care. We get anything for free because we have businesses are buying our other assets and also buying liabilities and paying for all of our expenses. So as an inside investor or a capitalist, because the highest level of investors is a capitalist, which is a master investor or an inside investor. An inside investor simply means someone that controls the company. We control the companies that we are incorporating, and we build our assets. We start small if we have to, okay? But at least we're control the company. We call the shots. We're talking to the business broker. We're talking to the business attorney. We're talking to our CPA, our bookkeeper. We're building our team. We're launching our ideas. Have you ever seen people that they have ideas and they walk around with the ideas for so long that they meet somebody else and they see the idea being applied, but they didn't apply themselves? It's because once you have an idea, if you don't put it to action, somebody else is going to grab it. So you need to act on our ideas 100%. You need to put it into action. And who cares about feedback of the world? You're going to get feedback, negative and positive. Okay, so you cannot be so sensitive about other people's opinions. And today we have technology, so the opinion is more in our face, or not in our face, but we can see it. We don't feel it as much if you don't pay attention to it. So it's not like you're knocking on people's doors and we're not doing that type of sales. We're doing real business. We're making money work hard for us, and you don't have to even have your face on any videos. You don't have to put any of your voices on any audios at all to create passive income. But what I'm saying is that on the internet, if we start an idea where there's a business X, Y, and Z, it could be a drink that you started, and now you get people saying that it doesn't taste good. Okay, who cares, right? Because it's just feedback. We learn from that. We hear the public say whatever they need to say, and then we take it and we run with it and we improve if we want to improve, and just accept that there's going to be good and bad feedback, and we just take it as feedback. Even when it's good feedback, we don't get too happy because it's just feedback. It's somebody else's opinion. And just like they think like that, somebody else will think the very opposite. So once we start building that thick skin, then we're going to be much better off, and it's going to be a smoother ride towards building financial freedom, right? And remember, our values have to be in order correctly and for us to build true wealth. In other words, number one should be becoming wealthy. That should be one of the first value that we should have is wealthy, becoming wealthy. Number two, be comfortable. Number three, secure. Majority of people have it backwards. They have secure number one, they have number two, comfortable, and then wealthy number three. And that's why they run out of time. They have no time. They need to sleep. They need to eat. They need to take care of their kids if they have kids. If they work 12 hours a day, right, counting like driving to the work, coming back from work, 12 hours a day is already gone out of their 24-hour day. So now they have 2 hours, 3 hours to eat, take care of their business, and they forgot about their minding their own business, actually. Take care of their family business, that's what I mean, right? And they lack financial education, so they need to go to sleep and do that again. So when are they going to make money? They're not making any money like that. Work hard for them because they lack the financial literacy. So we need to start investing on our financial education daily, something that we must commit to it, and it's not something that we graduate from. Because the more we know about business, the more we know that we don't know anything. There's so much to be learned that a master investor always goes back to the basics. And that's what a master is in all areas of life. If you look at the master fighters, they're back in the basics. You know, golfers, athletes, any type of individual that we admire, that is a master, that we consider them somebody that is a master, do it every day, they're always going back to the basics. So that's what we're doing here inside of our community, going back to the fundamentals of wealth. However, not everyone is prepared to give up their careers or drastically change their lifestyles in order to start investing full-time. The good news is that investing can never be a horrible idea, right? And so we can start anytime as long as we put some time to the side. So you need to start talking to your family about business, about building an asset together. If you're having a partner, don't just spend 8 hours working separately from that individual that you're supposed to love. And when you get home, you're not really talking about money. Remember that they did a case study, and I always say this because majority of people end up getting divorced due to the fact that they lack money and the communication about money. They lack money, and that's what the case study concluded. That's the number one cause, finances. And the reasons I just gave you the reason is because they're working too hard for somebody else's business. So they're really growing apart. The ultra wealthy, we always learn everything from our mentors at the dining table, right? At any time we're talking about money. That's why I always say, if we want to become wealthy, we need to talk about money every day. We need to have rich friends. We need to rub shoulders with other people that are wealthier than we are, so that we can learn from them. We need to be uncomfortable most of the time. In fact, I always say be comfortable by being uncomfortable, because that's when we're growing. And I'm talking about being uncomfortable in the right settings. It's because we're pushing ourselves. We're learning something new. So maybe if you're afraid of public speaking, right, and you want to become a leader, you need to learn how to speak in public and convey your message. Then a good way to start practicing is by recording ourselves, doing live streams. You'll be surprised how much I have improved. I mean, I have thousands of videos that I have done, and improves me every single day, without a doubt. I can look back from the very first video that I did. It's completely day and night, but it's because I have gone through all these videos and practicing every day. I'm sharpening my skills, and it improves me completely. So how do we become wealthier? Is by not only adding value into ourselves, but giving that value to others as well, sharing it with the world, becoming more generous. That's why we're here every single day on these amazing talks, and we're going to continue providing the good and bad news of money, the business principles that work in all economies. Sadly, familiarity does not equate to competence or even practical knowledge. The majority of individuals only know about investing in mutual funds through a 401k when it comes to paper assets, which a monkey can do that, right? Investing in 401k now is even automatic. You just get money taken out of your check. So anybody can do that. That doesn't take any financial intelligence. And that was created back in 1974. Remember, August 15, 1971, President Nixon separated the gold standard from the US dollar. From that point forward, money became monopoly money, fiat money, debt, currency, paper, money, and just an idea backed up by confidence. Money is created with debt. The United States works with debt. That's why today we're over $34 trillion in debt, and it's not going to stop. It increases more and more, and inflation increases with it, because the more we print money, the more into debt we get as a nation, the more the inflation goes up, because the dollar loses its value. It has lost about 95% since 1971. It's not going to take another 30 years or whatever to lose another 5% of the remaining value that it has. Money must move from a cash flowing asset to another cash flowing asset in order to maintain its value. If it stops, it goes back to its intrinsic value, which is zero. Every currency in history has gone back to its intrinsic value, which is zero, just like the Continental. It's not even worth the Continental. There used to be a saying back when the Continental was printed so much that it was everywhere. And so now we're moving into everything to be digital, right? And so we need to understand that, to see the world with our mind rather than with our eyes. The digital world is here. The future is here. It just hasn't manifested all around us. Ensure that we are building our assets with real assets, right? It's not about acquiring fake assets. We have to take control. We have to take the leap of faith. We have to take action. It's okay to learn from our mistakes. We can also learn from other people's mistakes. So that's why I always encourage, go out there, invest in products like self-development, courses, seminars, whatever we want to learn about. In whichever asset class, we're going to acquire a mentor and a product that will help us understand how to do it ourselves, so that we take control, because we are active investors. We're not passive investors, okay? We're active investors building passive income. Passive investors are those who lack financial education, are too busy to learn about investing. They're too busy working at their job. Ironically, they're working to make money, yeah, but they don't work on themselves to learn how to make money, which is very contradicting as to what they're doing. But we need to go back to history, understand why is that, because the school systems are built to the General Educational Board was established by John D. Rockefeller in 1902, which instilled a mission, which was to create two types of people, employees and soldiers. Employees to work for the corporations of the wealthy, and soldiers to defend the corporations of the wealthy, like the governments. And when we go to school, we're learning how to become an employee. We're thinking like an employee. Nowadays, there are entrepreneurship programs, but who are the ones teaching those entrepreneurship programs? That's the question we need to ask. Remember what we always say inside of our community, we need to check our mentors, because our mentors need to be those people that have done what we want to do. If they're teaching something that they haven't done, then there's a problem. We need to find better mentors. So make sure that we align ourselves with the correct mentors, and understand that the schools got teachers teaching about entrepreneurship that never started a business. There are only very few schools that maybe have 1 or 2 or 3 in their campus that have started a business, and then they have some credibility to talk about building a business. But the schools are not built for that, okay? And in 1902, when that was established, it was decided that all financial education will be removed from the schools, hindering the average human being from becoming a business owner and inside investor. That's why Master Investor is here, to provide financial education, which the schools lack today around the world. And this is the education that comes from real life experience. This is the ultra wealthy mindset. This is the principles that we need to know about business and investing in order to build wealth. And remember, we're going to talk about business all the time, because when we want to become successful at investing, then we need to talk about business, because investing cannot exist without business. Investing is business. To gain further insight into why this is not only a risky, but it also allows the investment strategy to invest in fake assets like 401ks and such. We highly recommend reading our articles on fake assets like the 401k, which is available for free by subscribing to our newsletter here. We also strongly recommend that people take our investment courses, How to Build Cash Flow with the Internet, Turn Passive Income On. It is ideal for acquiring the information base required to make profitable investments while lowering our risk. We advise investors to research, understand, and become proficient in the first 2 pillars of successful investing: fundamental analysis and technical analysis, before placing their money into the markets. Let's examine each in more detail, as well as how they differ from one another. Comparable to a financial health check, fundamental analysis. Similar to how our doctor checks our vital signs when we visit the doctor's office to determine whether we are well or whether further investigation is needed. Assets too have vital signs that we must be aware of to determine whether they are toxic or healthy investments. These vital markets are known as the 8 words that will change our financial context. In a nutshell, they are: number 1, income is the money we consistently bring in. It might come from investments through passive income and capital gains income, but if a person has a job, then the income comes from a paycheck or a salary, which will be earned income. In other words, the income we have can be active or passive. Active will be somebody that has to be present in order to make that money, so it'll be an employee or self-employed, somebody that is an attorney, a doctor, a dentist, somebody that works at a company and needs to clock in, then that will be active income. And passive income is the one that comes from investing, which only 2 types of income can come from investing: passive income and capital gains income. But not every kind of income is made equal. The 3 types of income: earned income, capital gains income, and passive income. Number 2, expense. The total amount of money we must spend each month on entertainment, groceries, taxes, and other things that we like to have in our lifestyle. So, expenses, right? Number 3, cash. Living requires having liquid assets. Some folks manage well on a surplus of money. Some people struggle with financial stress. Number 4, assets are the businesses or investments that we control or own with our companies that produces passive income and capital gains income when we do not work. An asset is, in the simplest terms, is a business, a system of systems that puts money in our pocket on autopilot. Number 5, liabilities. Promises we have made and the things we owe our own liabilities. If we don't have the money or revenue to pay off our liabilities, they could put our finances in danger. That's why it's important to always have and build an asset before we acquire the liability. But if we already have liabilities, then we still need to just focus on the assets column immediately. Number 6. So don't cut the liabilities. Maybe some of the liabilities can turn into an asset too. A lot of times we look at people's financial statements and they don't realize that they have liabilities that they could be making money with. If they just shift something, they could be renting their car on autopilot. They could be renting their houses that they have. Maybe they have 2 different houses. They may have a house with too many rooms and they can rent 4 of the rooms that are not being used. Or they can move to a different place, and then now that house is bringing 3 times as much as the mortgage, and it's putting money in their pocket to pay for the second house, and also even keep positive cash flow because it's bringing 3 times as much as the mortgage is. So they can pay another house with it and keep positive cash flow. So just look at the financial statement by filling it in. When you get inside of our digital course, How to Build Cash Flow with the Internet, Turn Passive Income On, click the link in the description somewhere on this audio or video. If you're watching this on our platforms on YouTube, Kick, Twitch, right? We're pretty much omnipresent everywhere at the same time. Thankfully to all this amazing technology that we have available with our fingertips. So 0 excuses as why we shouldn't be creating the lifestyle that we want right now. Today is the time to take action because we have never experienced such amazing times to be living in history. Number 6, net worth. The total of the disparities between our assets and liabilities is our net worth, which can be either positive or negative. Number 7, buying power is the sum of our readily available funds, our borrowing capacity, and our standing with private investors. Number 8, credit. A number of factors including debt to income ratios, payment histories, outstanding accounts, and more indicate how trustworthy we are financially. As you can see, the diagram that we created on screen for everybody to have in their notes. If you're listening to our podcast, go to our website, click the link in the description and sign up for the newsletter. It's free so that you have the article and you can have the diagrams that we're sharing on our live streams on YouTube right now. We can make financial changes in our life if we can control and manage these figures. In a similar vein, corporations have the same figures. The process of assessing a person, business, or even a sovereign nation's financial vitals, such as the 8 figures that have the power to transform lives, is known as fundamental analysis. Though nothing is either certain, there is a strong possibility it will be a solid investment opportunity if the critical signals are positive. If they are not, we should probably avoid them. For what purpose is fundamental analysis used? The name almost speaks for itself. The fundamentals of the company they are investing in pique the interest of fundamental analysis investors. This means that they thoroughly examine a company's financial documents and utilize them to ascertain the company's inherent value. The worth of the business or asset is more important to fundamental analysis than the price of the stock. One important tool in our investment toolkit is fundamental analysis, which may help with us identify companies that are sound financially but may be undervalued by the market. We must be able to read financial statements and recognize trends and opportunities within them in order to accomplish this. To put it simply, this requires financial literacy, but knowing what we are investing in or not is well worth the effort. Assessing a market and using technical analysis. Technical analysis focuses on the strength of a market, but fundamental analysis is more concerned with the condition of an asset. Furthermore, price and pricing patterns are given far more attention than the company's core competencies. For sophisticated strategies like options trading, it is quite helpful. A well-trained technical investor invests on the emotions of the market and invests with insurance against catastrophic loss. According to Master Investors Education, technical investors are skilled at analyzing market trends and then taking advantage of opportunities by employing strategies like short selling. They don't buy on fundamentals, instead they buy on price and market mood. Technical investing tools. Charts and technological prowess are used by technical investors to identify market and stock movements. Technical investors are skilled at using technical analysis tools to interpret charts and determine if stocks are in an up, down, or sideways trend. There are many different charts and patterns that might indicate different outcomes for a stock. They adopt different market positions based on this knowledge. Several of the wealthiest investors globally employ technical investment strategies. A basic tenet is to catch new trends early, and in later stages, we attempt to catch trend reversals. The appeal of both technical and fundamental investing is that we have access to the same knowledge as the wealthy and can invest like they do. Technical investing requires an investment in our financial education to comprehend the tactics required to be successful and to safeguard ourselves against catastrophic loss, just like fundamental investing does. However, technical investing may be enjoyable and highly profitable if we learn and master it. Interested in starting a technical or fundamental analysis? First, educate ourselves about finances. Invest in our financial education. The average investor may perceive stock investment as dangerous because they are unaware of the distinctions between these two categories of investing strategies. It is highly possible that many investors have heard terrifying tales of people who attempted to invest but lacked the necessary information and the potentially disastrous results. But as usual, power comes from knowledge, which is riskier, devoting time to comprehending a more complex approach to investing and making confident investments based on knowledge and experience, or not investing in our financial education and blindly putting our hard-earned money into mutual funds. The latter is the most riskier, right? Out of the two, we need to take control. Remember, We minimize risk by taking control over the asset. Now we call the shots. We're on the driver's seat. Doesn't mean that we're going to be working to make the money. We're going to be putting in the effort to get the asset going. But the asset's going to be running on itself. We're going to be working on our assets, not in our assets, which is a big difference. There isn't even a contest. We should start investing in our financial future and ourselves today. We encourage all to visit Master Investors Coaching, where we can discover an abundance of courses to help us advance our investment career. If we would like to learn more about technical and basic investing, join our community. And here at Master Investor, we're happy to have you with us in this beautiful ride towards financial freedom and building true wealth together, where we take in control, where we're learning the new rules of money, applying everything that we have in front of us, just like the ultra wealthy do, and creating the lifestyle that we all want. Because we have passive income and capital gains income that is coming from our assets column, and we are improving that daily. We're not shrinking, we're not cutting expenses, we're expanding. And that is the message, right? To treat our small business like a big business, to expand, to always go to sleep smarter than we were yesterday, to start investing in our financial education daily, and begin to invest as well. There are 5 asset classes, like I mentioned earlier. Number 1, business. Number 2, real estate. Number 3, crypto. Number 4, paper assets. Number 5, commodities. Start with one, build passive income or capital gains income, right? Depending on the asset. Rule number 1 in our community is that we work to build passive income and make money work hard through sound investing. When we do that, capital gains income will come along the way as well. But the main income we want to build is passive income, because that is taxed at the lowest bracket. We literally can combine debt, right? Because we're going to be using debt as much as possible. We want to use our credit cards, our loans, personal loans, money that we can raise for private investors and whatnot to acquire assets. The only reason they're going to give us their money is, and the bank's money, is because we have assets that are worth the investment. Otherwise, the money is going to run away from us. The way we attract money is by learning how to put and spot in deals that are impossible to pass, right? Because money is finding deals that are good enough to work and multiply that money. And money can sense that. So a good indicator is that when we present this to a bank, the bank gives us the green light to get a loan from them to invest in that asset, in that commercial real estate property. So choose an asset class and begin to invest. When we combine debt and build passive income, we can literally minimize taxes all the way to 0, because all debt is tax free. So if we're using debt, it's already tax free. And then if we're making income through passive income, because we're utilizing that debt to acquire an asset that creates passive income, then passive income is taxed at the lowest bracket, and we can minimize all the way to 0 in many instances, as long as we follow in the law and have a tax strategy ahead of the year for the money that we're going to be making, so that we can allocate those funds in the right places that allows us to minimize taxes legally to 0. We need a bookkeeper, we need to document everything. And here inside of our community, we always want to make sure that we're using the tax code, because it's a package of incentives for wealthy entrepreneurs. So there's no reason to hide money. There's no reason to say, oh, I'm hiding this money to pay. You know how people say that all the time? And that just tells me they lack financial education, and they don't have a team. They don't have a community of support where they learn how to navigate through the corporate law so that they can minimize taxes. Because in fact, the United States is built in the foundation of paying the least amount in taxes, as long as we're doing what the government wants us to do, which is invest in different asset classes that exist today, the ones I mentioned. And when we do that, we get tax breaks and we get benefits, because we are improving the economy, we're helping and creating jobs, we're solving problems in the world, and we're creating an impact, right? And so it's important that we understand the law, that we acquire the professionals that will help us utilize the law to keep more of our money that we are making. So it's not how much money we make that determines how wealthy we are. It's how much money we keep working through sound investing, and for how many generations. That's the holy grail right there. We want to grab our money and recycle it back through our assets column so that we can create even more excess of cash flow. And we're going to tap into the 3 E's of a master investor. Number 1, financial education. Number 2, financial experience. Number 3, excess of cash flow. So number 1, financial education. Number 2, financial experience. We're actively investing. We're not giving our money away to anybody. So we learn something new, we're going to apply. Okay, we want to learn about crypto. We learn about crypto. We invest in a course on crypto, and then we're going to go ahead and invest in crypto. That's what I'm talking about. And that's how we're going to see results. So we need to change our habits if you're not getting the results that you want today regarding money. We need to adopt the wealthy mindset, which you're doing right now by listening to this podcast. So make sure that if you learn something new from today's talk or video here on this live stream, give us a thumbs up, leave a good review, share the content, and let us know. If you have any questions, please, we're here to help you build the assets column. We're here to provide the ultra wealthy mindset and keeping it raw, building the bridge of the poor to the ultra wealthy mindset. Because when it comes to money, there are 2 types of mindset. There's a river in between. So we got the poor mindset, and then we got the wealthy mindset. The poor contains the middle class and the poor class. And the ultra wealthy mindset contains the wealthies, right? People that do not work for money, people that have figured out their assets column so that they can thrive with passive income and capital gains income. I hope that you enjoyed today's talk, bringing you the good and bad news of money. Let me know if you have any feedback. I appreciate you being here today with me on today's talk on the distinction between the technical and fundamental analysis. Stay extraordinary and wealthy. Talk to you on the next podcast. Thank you.